For everyone new to investing, unlock your financial future now. The journey toward financial freedom isn't reserved for the select few. It begins with a single step, taken today. For beginners venturing into investments, the pathway might seem shrouded in complexity and uncertainty. However, the key to unwrapping your financial future lies in grasping the basics and making informed decisions that pave the way for growth. With an array of strategies at your disposal, selecting the right one can feel overwhelming, but it doesn't have to be. The beauty of starting your investment journey is found not just in accumulating wealth, but in cultivating a mindset geared towards proactive financial management. It's about learning to navigate through market fluctuations with resilience and adaptability. Whether it's understanding stocks or diving into bonds, every piece of knowledge brings you a step closer to clarity and confidence in securing your financial destiny. Remember, each investor's journey is unique. Beginning yours today opens up a realm of possibilities tailored just for you. Understanding the basics of investing. Diving into the world of investments without a solid understanding of the basics can feel like setting sail in uncharted waters. One fundamental concept that every beginner should grasp is the idea of risk versus reward. This principle teaches us that the potential return on any investment is usually tied to the amount of risk you're willing to take. While higher risk investments, such as stocks, have the potential for substantial returns, they also come with greater volatility and chances for loss. On the other end of the spectrum, low-risk investments like bonds offer more stable returns but are less likely to make your wealth significantly grow over time. Then there's diversification, a strategy akin to not putting all your eggs in one basket. By spreading your investments across various asset classes, stocks, bonds, real estate, etc., sectors, and geographical regions, you can mitigate risks and reduce the impact of a poor performance in any single area on your overall portfolio. Think of it as a safety net that catches you when certain investments fall but allows others to soar, balancing out your financial growth journey with less turbulence along the way. This approach underscores how investing wisely isn't just about making money fast. It's about creating a resilient strategy that sustains and grows wealth progressively over time. Setting clear investment goals. Setting clear investment goals is akin to charting a map before embarking on a journey. Without precise destinations in mind, one might wander aimlessly, missing out on both the adventure and its rewards. For instance, envision saving for a dream vacation. This goal does not only dictate the amount to save but influences your choice of investment vehicles and strategies due to its specific time frame and risk allowance. Embarking on this financial journey requires understanding that certain objectives, like planning for retirement or saving for a child's education, could necessitate different approaches compared to short-term aims such as creating an emergency fund. Aligning your investments with your goals ensures that every dollar is purposeful, reducing the temptation of impulsive decisions led by market noise or fleeting trends. Moreover, it transforms abstract numbers into meaningful milestones, making the pursuit of wealth accumulation deeply personal and significantly more rewarding. Diverse portfolios, a beginner's safety net. Diverse portfolios act as a beginner investor's safety net, weaving layers of financial security by spreading the risk across various asset classes. Picture this. Instead of placing all your eggs in one basket, you distribute them among stocks, bonds, real estate, and maybe even some commodities like gold. This strategy plays a defensive role against the market's unpredictable swings. For instance, when stock values plummet due to an economic downturn, bonds or real estate investments could cushion the blow because they often move inversely to stock markets. By embracing diversity in your investment choices, you inadvertently tap into opportunities spread out across different sectors and geographic locations, factors that coalesce to buoy your portfolio against singular points of failure. Think of it as cultivating a small financial ecosystem where each element supports the other in times of need. It's this interconnectedness that not only mitigates risks but can also unveil surprising growth prospects from areas you least expect, proving that variety is not just the spice of life but a cornerstone strategy for anyone stepping into the investment arena. Risk versus reward, navigating market uncertainties. Navigating the financial waters of investment, one encounters the ever-present waves of risk and reward. These two forces paradoxically coexist. Where there is potential for considerable gain, there invariably lies the potential for loss. Yet, understanding this relationship is akin to harnessing the wind for sail. It propels investors forward. Amid market uncertainties, such as fluctuating interest rates or economic downturns, pinpointing opportunities necessitates a blend of strategy and intuition. To chart a course through these choppy waters, consider adopting a balanced portfolio that mixes high-risk and low-risk investments, akin to having both a sturdy boat and agile sails. It's about achieving equilibrium. High-risk avenues can offer dazzling returns, but integrating stable assets tempers volatility, providing a safety net during stormy market conditions. Moreover, embracing diversification doesn't just mitigate risks. It can uncover hidden gems in sectors previously overshadowed by more volatile markets. By being informed, yet flexible in strategy, investors can confidently navigate uncertainty, transforming potential peril into opportunity. Practical tools and resources for beginners. When embarking on your investment journey, having the right set of tools can significantly impact your success. A stellar resource for beginners is a robust budgeting app, such as Mint or You Need a Budget, YNAB. These apps not only help you track where every dollar is going but also provide insights into your spending habits. This understanding is crucial because it lays the foundation for making informed decisions about where and how much to invest. Another invaluable tool for novice investors is an investment simulator like Investopedia's Stock Simulator. It offers a risk-free way to dip your toes into the world of trading without putting any actual money on the line. Through virtual trading, you gain hands-on experience and learn the ropes of market operations, which demystifies much of the complexity surrounding investments. By leveraging these practical resources, beginners can build confidence in their investing abilities and develop strategies that resonate with their financial goals and risk tolerance. Conclusion. Embarking on your journey towards wealth building doesn't require a monumental initial step, but rather the courage to start where you are with what you have. This moment right now can mark the beginning of your path toward financial freedom and security. Remember, every successful investor started somewhere, making their first move with much to learn and infinite possibilities ahead. Whether it's setting aside a small amount of money each month into a high-yield savings account or investing in a diverse portfolio, the key is consistency and patience. Harnessing the power of compounding interest by starting early can turn modest savings into substantial wealth over time. Your strategy doesn't need to be complicated, it just needs to begin. With each decision contributing towards your greater goal, remember that your financial well-being isn't solely about accumulating wealth, it's also about empowering yourself with the knowledge and confidence to make informed choices that will benefit you for years to come. So take that first step today. Future you will thank you for it.